Hey guys, my name is Sage. Today is April 9th. I'm going to be reviewing the trades that I caught or didn't catch, and we'll review some of the opportunities that were missed and how we're going to try to improve to see that we put ourselves in the right spot. So, as always, I want to just let you know who I am. And then I want to discuss what I'm looking for, what it is that I saw, and maybe some potential positions that we're looking at going forward. So let's dive into this. You're going to look at what happened during the market today, right? So there was a pretty big rally. That's an 11% move on QQQ. Now, what you have on your chart is it's basically my trading system. There's not really too much to this. I like to use the EMA cross, depending on if you're watching me for the first time. But I'm an EMA trader, but also as of recent, I'm a little bit more of a volatility and volume trader as well. So looking to improve, always looking to improve my edge in trading because edge is so important. It's alpha, right? So the first trade that I caught today, I'm going to talk about that, and I'm going to talk about some of the other extenuating circumstances that happened in the market because we had a pause on tariffs. This is not news. All right, I'm sure you know this. I'm sure you know this way before than me telling you. But my first trade that I took was this one right here. I literally caught this in the morning. I caught this with our alpha channel. And why did I take the trade? Let's look at what the moving averages are, right? So I'm going to plot them on the chart. I'm going to use this right here. I'm just going to introduce the 5 and the 21. And I want you to see where the cross is. So I like looking at crosses on moving averages, specifically that 5 and the 21, because for me, I found with my back testing, if I have confluence with some sort of volume or some sort of oscillator, I'm generally looking to line up for a high quality move. If you trade differently, that's okay. There's more than one way to make money in the market. You can do a whole bunch of different things, but recently, right, I've always been an option seller, a little bit of an option buyer. I've always been a swing and a position trader, but lately I've been getting more into futures. And I do want to share with you guys what it is that I'm actually doing, okay? So you understand why I take trades in the first place. So right here, I have a perfect confluence of factors. There really is a perfect confluence. I have a 5 and a 21 cross. The 5 is the yellow line. And then I have the pinkish line, which is the 21. Now, you might be asking, what about that third line right here? It's just basically a colored VWAP. There's no secret. There's no secret. There's no secret. It's all about trading a setup. You don't have to trade my setup. Just make sure that if you're trading your particular setup with all the guys that we have that we're educating, just stick to your setup. You don't have to take different firing signals, right? If you want to trade my setup, if you want to take what it is that I'm doing, that's fine. If you want to trade maybe a little bit of a different setup, maybe you're an 8 and a 21, maybe you're an 8 and 34 EMA trader, maybe you're an SMA trader, maybe you're a Bollinger Band trader, maybe you're a Keltner-Chan trader, that's fine. That's fine. Just make sure that always your buy and your sell signals are always the same, because then that's how you get consistent results. Now, how do you know which system is best or which system is doing better than the other? Well, that's part of your responsibility. It's part of you doing your back testing. So let's go here. Couple of maybe little updates. I have a trend analysis on what I'm doing. Okay, so the trend analysis was telling me confluence of the following factors. I want to make this extremely simple because it is. It's really, really simple. What you have is that 5 and the 21 cross, which I've already mentioned a couple times, and then you have a slope that you detected. You detected that slope. So that's this line right here. The steeper the slope, usually the more incoming volatility or volume. So it's taking two calculations. So that volume is incoming, but Sage, why didn't it signal that on that first candle? Well, you need some sort of confirmation. You're not going to get it. Well, maybe if you jump into the 2-minute time frame, maybe it picked it up there. Let's see if it did. Maybe it picked it up exactly at that candle. So I'm still on, not the first. That probably is a good confirming candle. You're probably thinking to yourself, well, I trade price action. All this other stuff, it lags. That's fine. That's fine. You do what works for you. I am not good enough. I'm not skilled enough. I'm not smart enough. And I don't have the competence enough for me to read price action just bare as it is. I can't look at this chart and say, well, that looks like a little harami. It looks like a black cloud. Those things I can identify. Obviously, I know how to identify those things. But for me to have as many confluences as what I'm looking for me to stabilize a little bit more of my trading strategy, I prefer to use a different system. That's just where I'm at. So you might be a little bit different. I don't know if this is the first time you're watching me or not, but I just want to justify that, right? So why do I even have an indicator on there? Because all indicators lag, right? The only thing that doesn't lag is volume and price action. Those are the two things that are never going to lag because volume is it's going to give you the imbalance on if the candle is moving or not. The more volume And the more delta you have in one direction, the stronger the move. I mean, that's pretty clear right here. So we'll talk about that move here in just a second. Let's put on the detection mechanism. So we detected it here. I don't generally have the moving averages on my chart, but I'm trying to explain a point. 5 and 21 cross. This is my control. It's my control. So the 5 and the 21 actually was a candle earlier, right? So why didn't it detect it earlier? Well, it's using more than one calculation. Whenever you have that, you introduce into the system latency. So latency, all that is just a fancy word for saying a little bit of a delay. So that delay I'm actually comfortable with. I don't have to be pinpoint accurate. Do I want to be as earliest as I possibly can to the move? Obviously I do. Of course I do, right? No trader would say anything different. But I have to have some sort of trade-off. My trade-off is instead of being pinpoint accurate, I want to have just an additional layer of confirmation. If I were to take off volume calculation or ATR calculation, then more than likely I'm going to have maybe a quicker signal, but I'm going to get a lot more of just noise, right? If you're looking at where the vertical bars are, those are all the 5 and the 21 crosses. I don't want to be taking every single 5 and 21 cross because then I'm going to get a lot of false positives or a lot of trades that are just, kind of bypassing my time. So let's get back to this trade right here. What are the confluence factors? Pay attention specifically to that slope. That slope is so important, right? The slope is what I trade off of. The steeper that slope or the bigger the candle, usually I'm saying there's a big move to be made. So when I have that confluence of factors, using my TTM as well, this is not going to calculate the TTM because if you introduce the TTM calculation, then it's even more latency that you introduced into the calculation. But I use this as a visual component. I'm looking and seeing, are we crossing that zero threshold, right? If you don't know how to trade the TTM squeeze, it's a free indicator. You can get it, right? Just go into your indicators tab, type in TTM. I'm going to tell you how to do this. Probably going to do this more than once on these videos. So TTM squeeze, right? I have one that I built myself, but you don't need to use mine. You just go to TTM squeeze pro. There it is, right? There's a whole bunch of people using it because it's a very good indicator. It really, really is. So crossing that zero threshold, how many confluence factors do we have? Let's count them. I have my 5 and my 21, right? That's a really, really good confluence factor. I have my slope. So I have my detection right here, just visually. And then the third confirmation is going to be right there, right? The TTM. But Sage, it doesn't look like we're really firing. Well, it also is kind of early in the morning. I generally wake up about 6 o'clock in the morning because I want to see if there's any activity. I'm not just staring at charts, right? I have alerts. I had to disable my alerts because today I got more than 400 alerts. There was a lot of alerts going on. But this was the first trade that I took. So how do I know how long I wanted to hold on to the position? I held on to this position for 350 points. That's what it was. That's literally what it was. There's no exaggeration to that whatsoever. So let's take that off. Let's remove the drawings. And let's just see exactly why I held it as long as I did. You might be asking yourself, how do you have the confidence to hold on to that trade? Or maybe you're not asking that. Maybe you think I'm an idiot and you think I don't know what the hell I'm talking about. That's okay. That's okay. Just bear with me here for just a second. Let's remove the moving averages because I've already convinced you that it's using the moving averages to calculate the buy and the sell. It's using a couple of other calculations as well. But what do we have right here? This is just a VWAP. It's a VWAP that's using a ribbon calculation. So that ribbon is going to tell me if there's momentum on the move or not. So some of you are going to take off the trade as soon as you penetrate right below that threshold. So that threshold would be right here. How many points are you capturing if you go probably where that signaled there? You're probably catching about 195 points. I know with futures traders, generally you're looking to catch 20, 30 points, and that's fantastic. Don't stop doing that. That's really, really good, right? 20, 30 points, you can make a lot of money. But I would prefer, just me, I would prefer to take 1 or 2 contracts, but catch 200, 300, 500, 600 point moves. I would prefer that. I would prefer to be more capital efficient rather than take very large positions and just catch little gyrations of moves. Because I understand in high volatility environments, those candles, those are going to be wild. You're going to be knocked out many, many times trading. You take a trade and then all of a sudden there's a rogue wick and that wick is 200 points, especially in the environment that we're in now, right? I'm sure a lot of you are going through that. So in this situation, about 195 points. So I've just proven to you, I've just literally proven to you that I'm looking for, it's not hocus pocus. It's about looking at understanding what you're identifying. Well, why didn't you take a trade here? Why didn't you? Well, I didn't take a trade there because there was no identification mechanism. Do I really see a lot of movement here on the CVD? A lot of you can argue, well, I see this kind of going all over the place. Yes, but you have 3 things, right? And you have 3 things. Imagine sound waves, right? Imagine 3 sound waves that they're out of sync. Whenever those 3 things, they start lining up, then that's where you have that A plus setup. You need to be able to recognize that. You can use my system, but you can also build upon your own. So when you have that synergetic relationship, right? When you have that harmony, that's where you start making music. That's what I'm trying to explain to you guys. So cool. I didn't take that off there. Why didn't I do that? Because there's two calculations going on. There's one calculation. It's very simple. It's just an ATR calculation. I'm not, don't think that just because, you know, you're seeing a whole bunch of things on the chart that there's a lot of fancy math going on. There's not a lot of fancy math going on. It's not that difficult to figure out. It really isn't. So we have the ATR calculation, which is going to be right here. So that's that, you know, jagged line. So it's jagged, it's rigid, and then you have one that has more of a logarithmic curve to it. So there's two components. How did I know that I wanted to hold on to this trade? Well, it was really dependent on price action. So we had a strong stab of price action here lower, right? And I'm taking my time explaining this trade to you because I made $5,000 on this trade. Okay, so $5,000. I want to treat every trade that I take with respect, because if you start learning how it is that we trade here at High Strike, then you might, you know, follow the overall system, and then you start thinking how a trader should think. You shouldn't be thinking, oh, I want to make, you know, $1 million every trade. I mean, you can. There's a lot of traders out there on Instagram, on YouTube, on social media that are making a lot of money. Yeah, that's great. With the bounce that we saw in the market, I'm sure your portfolio moved just as much as mine did. But if you don't understand the tools that you're using, then it doesn't matter what indicator you can use. You can use literally the best indicator developed by the smartest people in the world. But if you don't know how to use the tool, it doesn't matter. So think about that. Think about that the next time you think, you know, all of this is just hocus pocus. Well, you got to learn how to read and use the tools. The better you are as a craftsperson, the more equipped you are with your trading methodology and just your knowledge as a trader, your emotional status, all the mechanics, the better you're going to be at this. And the closer you can get to those $1 million trades. So $5,000 right here. Why didn't I let go of this position first off? Well, let's look at it. So first position, I didn't really see very heavy price action. I saw, comparatively speaking, just remember, we're not looking at this. We don't know how far we're going to go. We have no idea. So I don't use replay features. That's not something that I'm interested in. I just want to show you price action, but just pretend that off here to the side, there's no price action there because we haven't hit that yet. So I thought that was pretty shallow. The trend analysis was still telling me, Sage, you probably want to hold on to this. So how many points did I give up? A lot of us get nervous with this because we want to see a straight line in our direction, and we don't really have patience to hold on to the trade. So I gave up in this situation 50 points. Many of you are setting stop losses at 50 points. So I was comfortable holding on to it. I was very comfortable. However, I was trailing up my stop loss. It would be very, very silly of me, very, very silly of me to take this trade and not trail it up. However, I'm just following right here, right? I'm literally following with my eye. If you have automation that's going on for you and you want to trail it by a specific threshold, that's okay. I'm still a semi-automated trader. I like using discretion. So my discretion was telling me, okay. If we do, probably if I get stopped out right here, but just give it a little bit of breathing room. So that didn't happen. We kept on pushing. Then we had a violent candle here to the downside, but we're still holding the overall trend. There it is. There it is. So where did I ultimately get stopped out on this trade? I ultimately got stopped out right here when we hit that trend line threshold. So why didn't I hold on to it longer? Well, Sage, you probably got another 50 points out of that. You can always have a better trade. Looking back in hindsight, you can always see exactly, and you're gonna see why I'm even bringing this up here in just a second, because I missed a 1,700 point trade, even though I detected it, right? So I'll talk about that. I was really pissed yesterday. I was off my ass yesterday because I missed this short right here. I knew that this short I could not have missed, right? I knew that I couldn't have missed it. I was working and I was paying attention to different things, so this was a mistake. This is where, you need to be paying attention to the chart, especially when the alert goes off. When you have something that you know that works, if that alert goes off, then you want to be paying attention. So this was actually my mistake. So let's go back here to the example. Where did I take it off? How many points did I catch? How many did I tell you when we first started doing this video? I said 350, right? Let's see if that's actually true. So about 380. I did 380 points. So that means that my entry wasn't pinpoint perfect, but I caught 350 points off this trade. So what did I do here? Did I take off my entire position? I actually was trimming along the way. Okay, so I take 3 contracts and I like to trim out as soon as we're hitting what are called profit targets. So how do I set profit targets? This might be something that you guys have access to. I'm not telling you. I'm not endorsed. I'm not telling you to go buy out and go spend your money. That's not what I'm doing here. I'm trying to teach you and educate you how to take just good, highly probabilistic trades. That's what I'm trying to do. So I'm looking at my Voodoo lines. My Voodoo lines is a paid indicator. And then I'm just trying to see exactly how high we can trade. So what do you think my levels were? If I took this trade off here, right? There's a little bit of a telling me, hey, I mean, this is how you drive the road, right? So this is what I was using. It's literally giving you support and resistance levels. So we came here, I saw that we hit the support level, or excuse me, the resistance level, and we rejected that. Never mind this, because I drew that in. So we hit that resistance, but we were kind of holding on to it, and then we hit the next TP. So where do you think I trimmed the position? Exactly there. So I pointed and I highlighted that candle because I knew where I trimmed the position. That was my first trim, right? 350 points, that's what it was. And then later, when we tagged right about here, it was about a 240 point move. So you're probably thinking, well, this guy doesn't really know how to manage his trades. I took the majority, 2/3 of the trade off at 350 points, right? Because I don't want to be greedy with 350 points. And then I took the rest of the trade off, leaving a runner for a potential of seeing something as monstrous as what we saw here. So we'll talk about this trade here in just a second. I'll get to that. So this is how I'm doing it, right? All the indicators, I'm showing you what they are. I'm showing you what the trading system is. There's no fluff. There's no fluff. This is how it is that I'm trading. The reason why I want to be as transparent is because I think that if you understand how to trade, then you're going to be so much more mature and responsible when you come to the trading floor. Cool? That's what I'm about. If you're not about that, or if that's not something that gels with you, that's okay. I'm not the trader for you. But for me, it's so much more important for you to engineer and also visualize the trade in your head of what you're actually doing so you don't get so emotional. If you plan these trades out, like I'm teaching people how to do in our program, right? I'm holding their hand and saying, yo, and some people are very skittish and very pessimistic. That's okay. You have to have a little bit of cynicism when it comes to trading. You have to always have, a foot behind. But if you are trading the way that we are doing here systematically, and a little bit after I'm done with this video, I'm going to talk to one of our traders that didn't take the systematic trade. She actually took a trade right here, which I was not about because the moving averages was already fanned out. Check this out. This is actually cool for me to bring up in the video because this is something that I'm going to talk to her about. And we have to make sure that we are dialing this in. The 5 and the 21 was already fanned out. So there's no reason for us to take a trade here. There's no reason. It's already fanned out, so you missed the entry. I do not want you to be taking entries like this because it's not a confirmed entry. Now you're starting to hit moving targets or trying to hit as many moving targets as possible. Don't do that. Tag where your moving averages, if you're going to use this system, tag where your moving averages are actually crossing. The steeper the slope on that cross, usually the higher amount of volume that is coming in. So if you're going to, by yourself, if you want to jimmy rig and reverse engineer what it is that I'm teaching you, that's okay. But just do that. Just make sure that those tags, right? I'm going to show you where the tags are. Just know that those tags, if you're going to trade off of them, make sure that you know where those are. So this is my control. This is telling me where the 5 and the 21 are crossing. So I got that cross here. I definitely did not get that here. So I should not be taking trades there. That is just you trying to hit a moving target. All right, let's move on. I know I spent a lot of time on this, but let's continue here. Let's remove the control, and then let's put our detection mechanism. So what else are we doing? If you're just, did I take this trade short? No, I didn't take it short. Why didn't I want to take it short? Because I thought that there was low volatility, and the TTM was telling me, Sage, you probably don't want to be taking trades right here. Do I want to do small intraday trades? Yeah, I kind of do, but I'm looking for morning volatility and I'm looking for the market open volatility. So those are generally things that I'm looking for on a consistent basis. Okay, so we've talked about that one trade that I took, right? I was able to make just shy of $5,000 on that particular position. So let's actually talk about that 11% move that we saw intraday. If you're not informed already, there was a pause on tariffs. So there's a 90-day pause, and then we got a press briefing out of POTUS himself discussing what the merits were for the pausing. We discussed a couple things here. But ultimately, us as traders, we don't care about too much of the micro or the macroeconomics. We care a little bit about more cause and effect. We care about the binary outcome. Do I go long? Do I go short, right? Most of you are looking at it in that binary sense. That's okay, right? Because I want that clarity as well. So when I'm looking at this, I have a couple signals. I have this one short that I've already alluded to that I didn't want to take. But just look at this. How many trades do I need to get to before putting myself in a situation where I might be catching probably one of the greatest trades ever, right? I've already done this. You don't know this behind the camera, but I'm doing a very good job in detecting breakouts, specifically because the recipe for the breakout is not that hard to reverse engineer. It's basically expansion of volume, price action moving very quickly, and then a function of volatility. So when you have that recipe, you can detect things pretty early. So why didn't I get a signal right here? It's because I already caught wind of it earlier. Let me prove that to you. Let's look at the CVD, right? So where's the slope on the CVD? First of all, you have it right here. And then you have a little bit of a squeeze on the TTM. You don't have a big squeeze? No, it's not there. But I want you to pay attention to this one little thing, and this is why I use the moving averages the way that I do. If I were to adjust the moving averages, maybe I'll get slightly different calculations. That's okay. To each their own backtesting. But when I'm looking at specifically the 5 and the 21 cross, I'm getting that 5 and 21 cross right here. So remember when I was talking about those signal chains, when I was talking specifically about audio waves, we have a lot of that dissonance right here. So these are called false positives. Does anyone want to be taking a trade where you move 3 candles, 10 points, and you get in and out of positions? You might be that kind of trader. I'm not. I want to be in positions where there's big moves, where there's big movements. So did I get that here off of the 2-minute time frame? I was very early, right? I was just using the 2-minute time frame as an example, but I want to share with you where we started seeing the uptick. Remember I talked about slopes? Slopes are important. They're very, very important. So just check out this right here. That one slope was detected. So we got some movement. We got some slope detection right here. So we got a firing of the signal, and we had a slope detection right around there as well. And then we have another slope detection here. So volume is not brewing, but it's moving, right? These are pretty shallow movements. I would consider these, if you're looking depending on the time frame. I mean, next to that candle, next to that 11% wick on the 1 hour, it doesn't, these moves don't really seem like much. But let's put this into perspective. How much of a move or how much of a candle would you have caught if you hit that threshold? You're looking at a 90-point move. That's something, right? 90 points. I would kill for 90 points in regular market circumstances for sure. So that would be another candle. I'm going to be tagged right there. That's another 40-point move. So if I'm going to catch this, I'm probably going to be tagged at a stop loss. And then I have this gargantuan, literally career-defining trade. So why specifically there? Why did it signal that trade there? Let's put on our control. Our control is going to give us these injunction points. So I have 1 point here, 521 cross. I have a 521 cross right here. It's amazing how this works. 521 cross here. So this was not able to filter out too much of the noise, but ultimately you did get a signal. So there's a lot of crossing of the wires. And then finally, you had a detection mechanism off of the 2-minute time frame. You have a little bit of a slope, and then the squeeze started firing right about here. So it has confluence with where the signal was given. But ultimately, what I want you to pay attention to is, let's get rid of the CVD just for a second. Let's get rid of those indicators, and let's remove the control. Just pay attention to the 5 and the 21. The 5 and the 21 crossed right there. So remember what I said about latency and calculations. This was just a tiny little bit late. How much was it late? And this is what I'm interested in improving. I just spent an hour talking about this with our members. So that latency cost me about a 60-point entry. Had I just used my moving averages, then I would have been a little bit earlier to this trade. And from here, without exaggerating at all, I'm not exaggerating one bit, if you would have gotten this entry on that moving average cross, which is how I've always traded, I don't have the fidelity on the screen to do this properly. Let's see. This move would have probably tagged you right about there. You would have taken that for 1,400 points. That's a historic move if you're doing this on the intraday. That's a historic move. That's what I'm talking about. There's going to be 1,000 million influencers and traders talking about this move and making a whole bunch of reels and talking about all these kinds of things. But I want to get down to the nitty gritty. I'm not interested in telling you I made 6 figures today. That's not interesting to me. What's interesting to me is how you can replicate what it is that I'm doing. And I'm going to share with you where I took a trade. Where I'm up $70,000 on the trade. I'm going to tell you what it is, right? It's not a mystery. I shorted the VIX. So what do we have in this situation? In this situation, I identified the 5 and the 21, and then I would have probably looked to trail up this trade. And some of you are going to say, and you're thinking about this the right way. I really, really do appreciate it. I can already read your guys' minds. I would have been tagged on that wick right there, Sage. You're absolutely right. You're absolutely right. So what it is that I want for my detection mechanism is if there is a re-entry, I would like that to be calculated. So in this situation, would I have caught the entire move? Probably not, because you have, how long is that wick? How many points is that? If I was continuing with momentum, that is by and large 170-point wick. There's no one that's going to be trailing by 170 points. It's just not, it's not feasible. It's not something that we do as traders. So in this situation, would I have caught the entire move just using my trading system? I'm going to tell you unequivocally no. But you put yourself in a situation where you might catch something. Okay, that's the whole premise of what it is that I'm trying to teach you. So in hindsight, if I'm looking at this, could I have engineered the detection mechanism a little bit better? That's what I'm currently working on. So I'm foreshadowing a lot. If you got up to this part of the video, I am foreshadowing quite a bit. So where do we go from here? What was the other trade that I took? This was just one trade. I literally took one trade here, and then I tried I think I was just kind of being clever. I tried to take a short position, not off the 2-minute, but off the 3-minute time frame. I tried to catch a little bit of the relief, but my indicator told me off of the 3-minute time frame and off the 5-minute time frame. 5-minute time frame, it didn't give me any confirmation. That's probably the last time where I negate the indicator, because why did I do that? Well, I'm still working through my own habits, but there's the 5 and the 21 cross. Do you not see that? It's right there. So we penetrated below. I was at one point, I was up almost $800 on this trade. I only took one contract. So I was up $800 on this trade, and then all of a sudden, boom, I got wicked out. I gave it some breathing room because I didn't want to trail too large. I was already up in profit. I'm up 6 figures on the day, right, with my entire portfolio. Not on my day trading, but my entire portfolio is up more than 6 figures today. So I'm pulling back on this. I'm pulling back, and then what do? I just trail the stop loss a little bit. The stop loss is right about here. My entry was a little late. Honestly, it was a little late. So I took, in all honesty here, I took 2 trades, but I probably shouldn't have taken this trade off of the shorter time frame. I need to focus on the 5 and the 10-minute time frame. Why? Because what happened, as soon as I took my entry, I was a little bit late on the 5 and the 21, right? I'm doing this off of experience. But then we jumped an additional 450 points. So I'm okay. I took a $600 loss on this particular trade. In hindsight, now that I'm doing my trade reviews on a consistent basis, I want to pay attention. Did I have the confirmation off of the TTM? I thought that I did. I honestly thought that I did. But the indicator was not telling me, hey, Sage, we're not really detecting a lot of volatility and we're not detecting a lot of selling pressure. You maybe want to back off on this one. You probably just want to let the market do what it's doing. Cool. So lesson learned. I know that now if that calculation is not popping up, maybe I don't want to follow suit on that. So what is the other trade that I'm up? You don't have to believe me. You don't have to believe me. But there is a timestamp on the signal that I gave. I shorted volatility as I explained that I would, right? I said that I was going to short the VIX. Now, I'm going to give you the exact breakdown of why I shorted the VIX. It's not going to be, I hate when people do this. I shorted this because I was reading price action and the tea leaves were there. And, I was reading this candle and then this candle was telling me something. It was speaking to me. I don't have that skill set. I'm an idiot. It really boils down to that. I'm literally an idiot. But I was looking for just price action to repeat itself. That is something that I do like to base my thought process behind. When we're looking to trade the VIX, I happen to have extremely good data when it comes to historical VIX price action. I know that we hit tops and then we go to attack that top once again. We usually have 2 to 3 failed tops on the VIX. So in this circumstance, I'm going to explain exactly where I took the position and why that was. So let's go back. I have different thresholds on the VIX, usually looking on the weekly time frame. So let's put that into context. So off the weekly time frame, we have 1, 2, and then usually 3 touches. Off of that second or third touch, I'm looking to see what is the risk reward to the downside. I know that the volatility is going to subside. I know that very well. If you think that the VIX is going to be above 50 for 8 months, it's generally not going to work that way. It has only done that maybe once or twice in history. You have the .com bubble, and then you also have this right here, which is the 2008 financial crash. Actually, you do have COVID as well. I forgot. I got to update my history in my computer here. So we have the .com bubble that was right here. So we were all the way up at, looks like 48, 50 on the VIX. And then you have the 2008 crash where the VIX was at the highest point it's ever been. And then you have what we're going through here on tariffs. So this is literally down in history. So notice, you can't really see it here because there's some fine points. But if I do a more of a granular search, there's 1, usually 2, sometimes 3 failed attempts, right? Because you're not going to break higher. You're not going to go to 100, 150 on the VIX. Historically speaking, you need something monumental, nuclear, in order for you to sustain those kinds of price action. So we're talking about something that, statistically speaking, the chance of it happening is very, very small. So now let's go back here to the 30-minute time frame. Why do you think I took this trade? So we have 1, 2, 3 touches, and then maybe you can constitute that as a 4th touch. Let's remove the indicator and see. No, not really. That was just my drawing. So we have 3 touches in that area. So 1, 2, and then what did I say? 3 touches. So I'm looking, usually I shorted this on the second touch. I already took a short position. I was stopped out. I made a couple $1,000s on the first position, but this is where I really made money. So I signaled this maybe about half an hour before the move. Why do you think I did that? About half an hour in, or a half an hour before the move, I got a signal. So my alert was telling me, hey, you probably want to look to short the VIX because there's something going on here. Because I'm not going to be watching this, right? I don't want to be watching the VIX and watching 13,000 things at the same time. So I'm looking at this, got the alert, signaled it, And that's all I had to do. All I had to do was pull the trigger. I had my stop loss set. I was prepared to lose $20,000 on the trade. That's no problem because I know what the risk reward is to the downside. That's how it is, right? That's literally what you have to do. So I've explained the 3 trades that I took. I said that it was 2 trades, but it was actually 3 because I forgot about the short position that I took. I just threw some money behind it. $600 loss after a 6-figure day. I'm not going to complain too much about it. So what do we have in terms of fundamental changes? Let me just change the camera here real quick. What do we have in terms of fundamental changes existing in the market? There has been a fundamental shift. We have a pause for 90 days on tariffs. So what this is basically stipulating is saying that, we're coming to the table. When we say we're coming to the table, countries that are alluding to maybe coming to a negotiation specifically for tariffs have already shown interest. So this is why you saw that 11% move on the indexes. Now, specifically, there's going to be some grievances there with US and China. So we already know that for the shorter time frame, yes, there's going to be a relief bounce. But before we're looking to just blindly buy into anything, I alerted the group and I said, hey, we got to wait for things to fundamentally change, because if there's not a fundamental change, if there's only a pause or a timeout button, you're going to see a relief rally. But realistically, how long are you going to sustain it? I may look in hindsight in the future and say, well, that kind of was the bottom, wasn't it, right? And what have I been saying on these videos? I said that if you cross the 5 and the 21, right, these are just little tricks that I'm including in these videos. When I get older, I'm going to say, I was kind of clever at teaching people just to look out for these things. When the 5 overcomes the 21, the short-term crowd, the 5-day or the 5 EMA crowd is going to be more bullish than the 21 EMA crowd. That's what happened. Cool. So what's going on? All the orders that weren't filled, all the institutions that didn't have a chance to buy into these things, which I don't think that there's many. You want to be watching these areas for entries once again. So we talked about retracement levels. You're not seeing my screen. I apologize. So when we're talking about retracement levels, let's go back right here to QQQ. When I mentioned them off the daily time frame, when I talked about them, I said that we had about 420, but our next threshold lower was going to be $385. So something fundamentally changed, right? We got to have a pause on tariffs, but we have a good technical area that we can base decisions off of. Did I buy the dip all the way at the bottom? No, I didn't do that. Why? How am I going to calculate? How am I going to know that pauses are going to come at 1 o'clock in the afternoon? I have no idea. But the indicators were telling me, on the 4-hour time frame, as I've said, when the 5 overcomes the 21, which is exactly what happened at approximately, let's say 440, then you had some price action that you could have chased. You had a good setup off the 4-hour time frame. I know no one is doing that. We're all trading 5, 10, 15-minute time frame. But just check this out. Check this out on the 30. On the 30-minute time frame, you got that cross. That cross was perfectly legitimate. I took the one that was off the 5 and the 10-minute time frame, but ultimately it's there. Those are the things that you want to look for. So am I buying everything? I already bought everything that I wanted to. I've been saying buy Google, buy Amazon, right? Buy AMD. I've been saying, what else have I been saying? Buy TECL. Also another one I was talking about was the small caps. So small caps, I bought a little bit more of that today. I definitely bought more small caps for sure. So what am I saying? Am I saying, no, everyone buys small caps and listen to me because I know something that you don't? No, I'm not saying that. I'm not saying that at all. I'm just saying that where we are for risk reward, that's all I care about. It's just risk reward. I don't care about anything else aside from risk reward. If I'm at a demand zone, which I think I am, I have one lower than that too. The lower demand level is going to put you at $11. I don't know if we get back down to $11. If we do, I'm buying even more. So my average on this is $28. I am not screwing with the numbers whatsoever. I'm giving to you exactly what my average is. I'm not bullshitting you and telling you, hey, I bought at the perfect bottom. Look at me. I'm better than you and I made more money than you. I have no interest in that. I have interest in you guys that actually have a job and actually are real fucking people that are actually putting money behind the market, that maybe you've been decimated by the 25, 40% pullback that you had in your portfolio. You have grandparents, you have parents, you have people that you care about. From all this bullshit, policy making, all the stuff that's been going on in the market, if you've been feeling like, I don't really know, I don't have a handle of what my finances are going to be in the next 3, 4, 5 months, think about things the way a trader would. Someone that actually has calculations behind what it is that they're doing. Am I going to be right all the time? No. Am I down on my portfolio? Yeah, absolutely. I'm not going to pretend that I'm beating the market. I'm not beating the market. I'm still pissed off with all the price action that we saw to the downside. So am I excited about a 10% move to the upside? Not really. I'm not really that excited about it. I would be excited if we start to have a rally from here on TNA, TECL, QQQ, IWM, all these other things, I'm excited if we have 100% rally from here. Then I'll be excited because my portfolio is moving, right? I'm not really that excited on a QQQ position that's moving 12% off the bottom because, you know, when we started in January, look how much we're still down, right? We're still down 13%. Did we have a nice candle move? Yeah, we had a nice candle move. But does that really justify the $30 trillion that we saw pulling back in the market? Where you are geopolitically on this, or just in politics, that's up to you. I'm not here to sway you in one direction or the other. I'm not someone. I don't stand on either side of the aisle. I'm dead in the middle when it comes to this. But when you screw with people's money, that's where I draw the line. I'm not satisfied with that, and I don't care who does it. I don't give a shit who does it. So I'm still not convinced 100%. Am I buying into certain things? I've already bought into small caps, and for most of you, you should be buying into ETFs. If you want just a quick list, I will share them with you. I won't tell you exactly which ones I'm considering buying. Do your own research. But the ones that I would consider are right off here, right? I think my face is not. So the ones that I would consider, all of these would be considerations. SOXL, that was up 54% today. I saw it at $8. I made a comment this morning. I was like, you know, that kind of looks interesting. Had I bought a little bit of it, you know, $20,000 worth, yeah, that would have been $10,000 gain like that in literally 20 minutes, but all good. So if you're looking at SOXL, FAS, a lot of these, with the exception of LABU, you don't want to be buying into anything of biotech right now. But bots, CIDR, hack, bug, DPST, these are things that you can look for long term. This is a personal favorite of mine, chat, right? This is generative AI ETF. This is something that I would consider. I got a nice buy signal on this, so I would consider some of these things, right? This is not financial advice. This is just some stupid person that's sharing with you his opinions on what he's doing in the market. The biggest trade that I've taken so far, which I think is my biggest day trade thus far, it's turned into a day trade, was that short position on the VIX. Or VX in this situation, right? I shorted VX. This was probably one of my best futures trade today. I thought that my best futures trade was 2-3 days ago, where I made $55,000 on that long position. But this right here actually took the cake. So I almost took it at the top, and I had a regression of price action of how much? I had a 30% move to the downside. So if you've been following along with what I've been saying, each point of these is $1,000. $1,000. I didn't take one contract. I took several contracts. So I shorted volatility because I told you I was going to short volatility. If you watch any of the videos that I've made in the last couple of days, I literally told you play by play what it was and what I was going to be doing and what I was looking for. So there it is. If you all have any questions, comments, concerns, criticisms, donations, if you have anything that you need to add, or if you just want to make fun of me, that's okay. Leave it in the comment section because I do want to get feedback from you guys. Hopefully, with the little bit of momentum that we might be having. If it's only 5 people that are showing up, I'm okay with that. But as long as you're learning, I'm okay. I'm going to show up and I'm going to make sure that you're getting the proper education, because I think that if I had something like this, I would be extremely grateful, because I would have shortened the learning curve for myself when I was learning how to do this stuff. So thank you so much. I appreciate you watching this video, and watch for the recap tomorrow.